Gentlemen, welcome back to another episode of the Million Dollar Dads podcast. I'm your host, Mike, with my co-host, co-founder, and best friend in the entire world, TJ Larkin. How are you, sir? Thank you for being here.
Thank you for having me.
Today's super exciting, guys. We got another, as you know, these podcasts are going to be about 30 minutes long, and the last 30 minutes we're going directly into a Q&A for our member-led community. So it's a member-only Q&A. If you want more information about that community, go to milliondollardads.co. In the upper right-hand corner, click Apply Now. But today we got a local on. Actually, this is like the second local almost in a row. One of my buddies, Matthew Key. So Matthew is the leader of the Tundra Angels. So Tundra Angels is an angel investor network based in Green Bay, Wisconsin, and they invest in high growth tech startups right here, basically in my backyard. Met Matt a couple months ago. Super awesome dude and really interesting. I'm looking forward to this conversation today because it's kind of the opposite of the conversations that you're seeing on Twitter about buying boring businesses and only investing in slow growth. It's like the complete opposite. So Matthew has graced us with his time, and he's going to come and tell us how to be an angel investor and make our next million. So in the next 27 minutes, Matt is going to give you the blueprint to be a millionaire by the end of the day. Matt, thanks for joining us, man.
Happy to be here. Thanks, Mike. Thanks, CJ. Appreciate the time.
Hey, man. So give me a little bit of context about just who you are, right? Because I want to learn a little bit about you before we dive into the angel investing conversation, and kind of maybe the 2-minute from birth to now, Matt Key story. So give us a little context of your backstory and who you are, and then we'll get into the conversation.
Sounds good. Thanks, Mike. Yeah, and happy to be here, and happy to keep this dialogue and just add tactical value to all you guys. So so I grew up in the Chicagoland area, not originally from Wisconsin, where I live now. I live in Green Bay, Wisconsin. But I grew up in the west suburbs of Chicago. So if any of you are familiar with the Chicagoland area, kind of Chicago, then Lyle, and then kind of west suburbs by Naperville and Aurora. Went to school there at a private school, south of Chicago, which is where I met my wife. So she's originally from Green Bay. So that's the connection to Green Bay that eventually led us here, among other things. And I studied international business and Spanish in school, so double major with a minor in music. And had the opportunity to study abroad 2 different semesters, which is just great. Fluent in Spanish as well, which actually my first job out of school was as a bilingual banker at JP Morgan Chase in the Chicagoland area. So worked there for 3 years, spoke Spanish to Spanish-speaking clients probably at 25% of the day, and worked with a high net worth portfolio as well. So that was 3 years there, and then I had it's interesting what I'm doing. The last 2 ventures that I had were my own ventures. And I would say one thing it's kind of interesting. Sometimes maybe all you get asked this, but did you ever think about starting your own thing, or is entrepreneurship something that you kind of grew up doing? In my case, entrepreneurship was never something that I had the desire to do. I never had sort of like a desire to be as a business owner. My first exposure to a business ownership was when I was helping these clients at Chase, and they'd just be wealthy. They just have all these investments and money, just pretty remarkable net worth. And I said to myself, what the common thread is, they all happen to be business owners. And I'm like, well, that's interesting. But even that, despite that observation, I never had like a desire to be a business owner, to be an entrepreneur. So fast forward, I went back to school, got an MBA, and then added a second master's degree in entrepreneurship and at Indiana University. And through that experience, I literally just fell into entrepreneurship. It was a side project that my dad tasked me with, and he had been in the bond market for about 20 years at that point. And he literally said, hey, I've got an idea to start a software company around an algorithm that he's developed about sort of decision making on bonds. And a side project in 2014 turned into a 5-year journey of literally taking an idea on paper, building out a software product, pitching to investors all over the country, and eventually raising venture capital from a Fortune 500 company in that space. And that was a 5-year journey from 2014 to 2019 that wasn't completely unplanned. But I think the thing that I found was I literally, when I went from JP Morgan to the startup, I thought, oh my gosh, the world had opened up to me, because I was almost like, wow, there's like life beyond the four walls of an organization. I was able to be creative. I was able to I'm very much a creator and builder by nature, which I didn't know until I started. I literally was kind of like handed an opportunity to be an entrepreneur, and I love it. So that's everything pre-Tundra Angels. And I can get into kind of what Tundra Angels is and how that came about. But that was the lead up to what I'm doing now.
Yeah, and that'll be good. Like, what is Tundra Angels? Just a quick overview. So when because a lot of my questions will probably refer back to that. So give us the quick rundown of what Tundra Angels is, and then we'll kind of dive more into the tactical conversation.
Yeah. So let's back up a little bit. So the 5-year journey that I was saying, I was pitching for capital, right? So let's zoom out even farther. In a macro perspective, there are different asset classes, right? There are stocks, there are bonds, there are mutual funds. Those are investment vehicles that you would go to a financial advisor with down the street, Schwab, what have you, and he or she would put together an investment portfolio of such asset classes. There's other asset classes like real estate, Mike, and others that alternative assets, derivatives, crypto. And then there's the world of venture capital. So venture capital is another asset class that basically you invest in a technology-based, a high-growth company early on and secure a piece of equity. And the idea is over 5 to 7 years, as that company grows, as more customers, as more revenue, then that company, when it's acquired, pours a pretty lucrative financial return to the investors that invested in the early days. So what Tundra Angels is a investor group in that asset class. So we have 45 members in our group who are all high net worth individuals in Northeast Wisconsin. They pay a membership fee to be part of the group. And as part of that, I am talking to startups all day long, and I curate deals for them. And we have a quarterly pitch meeting, and we've got one coming up here shortly. And the startups that I select and curate pitch for our group, and then we figure they meaning the investors determine which ones they're interested in pursuing an investment in, and then we do due diligence. And if we still like what we see after pulling back the curtain, then we make an investment. So we've made 15 investments up to this point, about $3.2 million deployed in total.
Yeah, and I really love the model that you've taken, because it aligns with the community aspect of $1 Million Dads. It's not just a group of guys or gals that have money that write you a check. You've created a community around this and has actually made it a membership model, which I want to dive into a little bit later on. But tell me why, Matt, like I queued up before we were officially recording, maybe it was on the recording, in a world that we're seeing more boring businesses for our guys. We see a lot of our guys are spending time on LinkedIn and Twitter. And the conversations around Twitter is buy boring businesses, buy them, build. Everything is kind of the antithesis of tech startup. So it's almost framed in a way that a high growth tech startup is a gamble. You're basically, and this is probably the pushback maybe that you earn on a air quotes objection you overcome. Why high growth tech startups versus the boring business? What do you see as an advantage, disadvantage to both?
Yeah, for sure. So there's the first thing I would say is that just like anything, it requires a portfolio. So buying one business or investing in one business is not the way to fortune. Basically, I tell our investors, expect to invest at least 10 to 20 to 30 times over the next several years to give yourself that opportunity to hit that 10x that's going to make up for everything else. So from an asset class perspective, an investability perspective, our investors, they're running their own businesses. They're CEOs of their own businesses. They have equity in their own business. Like they either own it outside 100% or they own a large portion of it. So from a financial perspective, they're pretty well, in place there. They also have their own stocks, bonds, mutual fund portfolio, likely have a real estate portfolio. So venture capital is kind of like this other investment class that arguably it's just straight up fun. You know what I mean? It's straight up fun to be able to look at these companies in the early stage and be like, wow, what could this become, right? In 5 to 7 years. And I'll tell you that one of the aha moments that people have, that our members have in our group, is when they join the group. They're always kind of like when they get into it, they're kind of getting a sense for kind of what the value prop is about. But the aha moment for almost anybody is sitting in that room with 25 other experts in different fields, CEOs of their own companies. And there's an 8-minute pitch and an 8-minute Q&A, and hearing the perspectives of the IP expert or the healthcare CEO or the CEO of the logistics company, and how they think about the world being completely different than yours. And that's, I think, one of the cool things about it is this is a community, and we're investing as a community. It's not just like a lone wolf type scenario. So we're able to provide a lot of round out the experience level. So, but in short, to answer your question, it's fundamentally around, because it's fun, and for those who have extra liquidity and discretionary income, I think I have so much fun on a daily basis because of the startup conversations and technologies that they're building. They're literally going to change the world.
So, and what I hear through that is probably not the best vehicle to have your first nest egg, but a really good email or a really good vehicle to, it's not maybe not to get rich or to get wealthy, but it would be like to go, instead of 0 to 1, it would be like 1 to 50 or 50 to 100, right?
Totally.
So, okay, that's cool.
It requires a systematic process. Yeah.
What percentage of your members' investment portfolio would you say is in venture capital? Like once they've gotten to that point, is there, or is it all over the map?
No, the rule of thumb is up to 10%. I mean, fundamentally, the rule is up to 10%. So that gives you a sense for kind of like the amount of net worth that they're deploying in venture capital. I'm very well aware that, and frankly, it should not be any more than 10%, because, you will lose money. Right. And so that's, the rule of thumb is up to 10% of one's portfolio.
Does the high interest rate environment right now affect you positively or negatively in either direction, or does it really not matter? How does the market affect what you're looking for or looking at?
It's a great question. Two things. One is, our investors make their own decisions, and so I don't have a pulse for where every single person is at from I'd rather have my money in a savings account or something like that, or a CD, as opposed to in venture. What we're seeing though is that there's a lot of excellent companies that, because of the market, they're actually, we can get into them now at a discount than we could have, for example, in 2021 when the market was at its peak. So for the astute investor, the astute venture investors, this is actually the opportunity, frankly, of for a long time to get into a good business at a discounted valuation. So you can see it both ways. Yeah.
Got it. That kind of leads me. Is there any correlation between high growth tech startups and the emergence of crypto? Do you see any, or with the market in general, do you see any commonalities between a high growth tech startup market and maybe the crypto market or anything like that? Just a random thought I just had.
It's a good question. So I don't see as much of a correlation between the crypto market specifically, but I will say one of the things that was interesting was at the beginning of the year when OpenAI launched ChatGPT. That was a bit of a step function as it relates to some of the startups that I'm seeing, that broadly speaking we're seeing, because essentially when ChatGPT was launched, it essentially provided a doorway, an API technically, for all these different tech startups to access ChatGPT in really unique and slick ways. And so I would say it's more correlated by technology trends. And what you'll see actually, if we look back in history, which we don't necessarily have to, but the best technology companies happen at inflection points in technology. So for example, Uber was not possible 20 years ago because the specific GPS tracking was not good enough to localize your GPS signal right on the street corner. It was more like, kind of, you couldn't really tell where the person was because the GPS wasn't so good. So companies like Uber and others, saw this as an opportunity and capitalized on it. So it tends to be correlated more to tech trends than it does sort of crypto or sort of other even macro events.
Yeah, I mean, AI is clearly the rage right now, has been for 6 months, and seemingly will continue to be. Are you seeing more AI specific startups, or are you seeing more AI supported startups? Like, or is there an even mixture of both, I guess, at this point?
Yeah, I'm seeing a lot. I'm seeing a lot of both. I think here's the thing. It's important to separate sort of the truth from the hype. Okay.
Yeah.
Because there's a lot of people say, if you read a one-liner of a company, we use AI to blank, blank, blank. And there's so many different, one-liners of executive summaries that read that like that. Fundamentally, what matters is what is the business problem being solved? Because applying AI to something that nobody's going to give a rip about is not a good way to build a product-based business, frankly, any business for that matter, right? And so I could basically be like, call it blockchain, AI, machine learning, like, whatever the buzzword, insert buzzword here. I frankly don't give a rip about the technology that's underpinning it. I care completely about the business problem, the business case being solved underneath the surface, because if there's no significant business case that's being solved that could be monetized, then you're gonna ship passing in the night, and you're just using a technology trend for no reason. And what we're seeing right now, my opinion, there's just a lot of hype around AI applied to this, AI applied to that, and it just, there's so much more beyond just a technology trend at play to evaluate a business.
Yeah, I love that. That was a great transition. Thank you for making it easy on this end, because my next question was going to be around the business itself. And then when you look at that as you're the rainmaker, you're the guy going out for the community, the membership, and cultivating these relationships and bringing in all the deal flow opportunities. How much, if you were going to, like, percentage wise, let's assume a baseline of the companies that I'm looking at, I believe in the problem that they're looking to solve. That's our baseline. So they're all even there. But how much of your decision-making process is betting on the jockey versus the horse, betting on the person that is, and I'm in the context of what I'm thinking is guys in this group who run businesses, we all have opportunity to grow and learn. What are some things that you see in the guys and gals that you pick their company, maybe more so because of them than the company? What are some of those common characteristics that you look for?
Yeah. So this is where I love what I'm doing, because every single day is a learning opportunity, and it's just so enriching, because I love strategy. I love tactics. And when you work with founders, you get both. So some of the things that I'm looking for, I kind of separate it out a little bit, because I would say what I'll say on the founder side, every CEO is different. Okay. There's some CEOs that we have invested in, of the 15 companies, who they're PhDs and they are smart as they'll get out in their field. And you might say they're not the most charismatic person, maybe not the person that you like, a Jeff Bezos or something like that, when you just kind of like, it's a clear that's like, wow, this person is just, they're the CEO clearly. We've got a lot of other folks who they are so wicked smart, and yet they're so good at executing what they need to, that they're effective, right? And then you have others who they're the front, man or woman, and they're on stage, they're doing keynotes, they're doing that thing, And what I've found is it's never, I'm not really necessarily looking for the personality. What I'm looking for is underlying is just the deep thinking about the opportunity and just the will and the drive to execute. I'll just give you a quick example. So there's a company that I'm familiar with that was running into kind of, financial challenges. Let's put it that way. Nothing unfamiliar to any of you nor any of us, right? But the company had a couple options, and the options on the table were pretty audacious. They were pretty bold moves. And yet what was impressive was the CEO of that company saw what needed to be done, confronted the brutal facts about the situation, and made it happen. They made it happen. It was a kind of a 3-step move, 1, 2, 3 move sort of process. And after that moment, that was I sometimes say that was the I'm so glad I invested in you moment. That was one of those moments where it's like, whoa, that's it. That person's got it, right? They're that's why they're there. That's what the CEO needs to do, right? So I'll just say that's kind of on the person side. I could go into other things as well, but we can on the business specific stuff. But I think at the end of the day, you would find, and we probably all fall in this category too, a lot of times the founder and the CEO, they reflect the business because maybe they're solving their own problem. Right? Yeah. And so they're somewhat intertwined, although I evaluate them differently in different ways.
That's awesome. Yeah. I love that example too, of just kind of making the right move in the moment for what the business needed. Where are these businesses at, to give people a feel for when you're investing in the companies like this? Where are they at? Are they pre-revenue? Do they need to get to a certain amount of metric before you invest? What does that look like? Like, how early are you having these conversations?
I'm having them as early as possible. That doesn't mean we're going to invest in them, but my mantra to entrepreneurs is I want to talk to you as early as possible, because I have a pretty high degree of confidence that because I've been a founder and because I've seen a lot from the investor perspective, I want to be that voice, a voice that helps you make the right decisions, going forward, even if we don't invest. So, but it's pre-revenue. We've invested in frankly, like probably 2 or 3 pre-revenue companies. And then on the top end of things, we probably have companies that are, around invested like several $100,000 of revenue and beyond. So it's really runs the gamut.
Yeah. I wanted to, and maybe this will be a better question for more into the community call. One of the things that I think about, why Wisconsin? When I think about high growth tech startup capital of the country, right? I don't think Green Bay, Wisconsin. Now, maybe I understand a couple things with Titletown Tech and different things that maybe the larger country. But if you're not in this world, and I look at this guy wearing a flannel shirt from Wisconsin saying, I only invest in tech startups in Wisconsin. Exactly. I feel like you're kind of nuts for investing here. So why Wisconsin?
Yeah. So it's somewhat practical and then somewhat kind of strategic. On the practical side, I talked to about 120 startups a year, and that's just in Wisconsin, right? So to give you a sense, I spend probably 50% of my week talking to startups and figuring out which ones should pitch for our group and when. So if I were to say, hey, we're investing in the Midwest, all of a sudden I've 4x my deal flow, but my bandwidth is still the same. So it's one of those things where it's kind of like, all right, what can we do really well and hit it out of the park? And so that's one of the reasons from a practical perspective of why Wisconsin, from a bandwidth perspective. But I think the other thing is that as a state, Wisconsin is in the early, how do I say this? If you look at the broader Midwest, forget about the coast, because obviously they're at a different order of magnitude in terms of success with their startup ecosystems. But if you look at the Midwest, Wisconsin is tends to be lower on the list of like kind of startup, up and coming startup ecosystems. They're up and coming, don't get me wrong, but like compared to like Illinois, which is basically Chicago, or an Ohio, kind of Columbus, and even Michigan, it's just lower on the list. And so I think that in one part, it's a nod towards how do we focus our resources and assets in and make us collectively better as a state, but also how do we do it while also being able to generate some really nice return. Like, for example, a number of the companies we've invested in are university spinouts. So technology coming from the University of Wisconsin-Madison, which has a robust IP portfolio, or University of Wisconsin-Milwaukee, which has a robust IP portfolio. So, it's about the opportunity, it's about the practical nature of it, but also sort of about, I think one of the things that one of our investors said it well. He said, I could invest, I could do this other places, right? But one of the things that he likes is, he said, quote, local people investing local. And I think that's really special and unique, quite frankly, because most people kind of broadly open themselves up to deal flow, and great, they have the capacity to do it. But that's not where we sit. And I think from a value perspective, it definitely checks a unique box as it relates to, the Wisconsin investor.
I was just thinking values, man. Like, it's very Midwest values to want to be local focused, support local, shop local. We hear all these things, especially coming in this shopping season of life, coming up towards as we approach Christmas. But I also want to talk about like the community that you've created around this. Why did you choose to kind of go the membership route, community route, and how have you, we're a community here. How have you seen that impact to the good, to the bad? So why did you choose that route? And what's the impact you've seen kind of going that model versus, hey, I just know a bunch of rich guys and I'm going to have them send me a check?
Yeah. So broadly speaking, there's two models in venture capital. There's a VC fund. Everyone's probably familiar with venture capital fund. And then there's an angel investor network, which is what we are. So VC fund is basically where I go to you and say, hey, I'm going to invest. I'm putting together a $25 million fund. Will you invest in my fund? You would then write a $250,000 check, or at least commit to write $250,000 check over the course of the next number of years. So with that, there's a limited community aspect. It's not really built for a community. It's more built for somebody who says, I want to invest in money. I don't really need to know all the details, but I trust you, Mr. and Mrs. Manager, to make it happen and to deliver the rest of the return that you say you can. I think, so the Tundra Angels was started out of the Greater Green Bay Chamber. So about 2019, this is what the part of the story that I didn't get to, after the company didn't pan out, the fintech company that I had, in 2019, the chamber hired me to, Greater Green Bay Chamber hired me to raise a venture fund. So they spelled out a economic development strategic plan. And in the plan, it was put together a pre-seed capital source. And so I was brought on the team in 2019 to do that. The venture fund idea, we looked at it and it didn't make sense for a number of different reasons. So we pivoted to the angel investor model, which honestly, from a community-based organization like the Chamber, it's a perfect fit because they are all about bringing the community, convening the community. So that was the initial impetus. It's not something necessarily that I suppose I helped choose that model, but it also allows the investors to make their own decisions, to be control of their own destiny, and to be in a deal or opt out of a deal. So I think that's one thing. But I would say the last thing I'd say is one of the reasons that I love it is because I'm a very relational person. I love being around people. I love adding value to people, and the angel investor network model fits my personality so well because I just love bringing people together. I love the aspect of community, and it fits me really well. And it's not something that I didn't think about, it wasn't something I planned on, oh yeah, I am relationally minded, so I'm going to put this together. It just literally was like, this is a vehicle. And then I learned that after the fact, wow, this fits me really well. So that's kind of how it came about. It's seeded from the Chamber. And then Tundra Angels became independent from the Chamber about 1.5 years ago. So now it's its own LLC that I own, and that's an independent entity at this point.
Yeah, no, it couldn't fit you any better, just knowing, you know, and the small amount of interactions we've had in the infancy of our relationship. We literally meet in the places that you're meeting with other people. That's
Exactly.
so
Exactly, dude.
it is
Exactly.
totally perfect.
Yeah.
I want to transition as we kind of close down this portion of it and tell everybody where to kind of learn more about the Tundra Angels, even if they're not in Wisconsin,
Yeah.
just to reach out and maybe, you know, I think it's probably good to expand your network wherever. I want to talk about accreditation because a lot of the guys in this community, you know, we're going to have guys in this community and people listening that are probably in that 100 to 500K range in their businesses,
Yeah.
like I mentioned, maybe are accredited or could be accredited or right on the cusp of accreditation.
Yeah.
I want to just talk about the importance. One of the things that we want to maybe have some conversations in the community is like the importance of accreditation and being an accredited investor versus just being an investor. What have you seen in that being in this world for, you know, I guess since 2014, almost
Yeah.
a decade now? Is it really that important to be accredited? I mean, if you're right on the cusp, like, is it something that people should, like, what are the doors that open up to you? All the stuff. Talk about
Yeah.
accreditation for a second.
So great question. So there's I would say more of a regulatory component to it, which is more practical in nature. And then there's another practical component to it, which is about ability, capacity to deploy. So the Securities Exchange Commission, SEC, basically specifies there's what's called an accredited investor and a non-accredited investor. An accredited investor, for all intents and purposes, basically has to meet income thresholds. You can Google it, just Google accredited investor SEC, but it's basically over 200K in the last 2 years or net worth of over $1 million, not including your primary residence. So the SEC looks at angel investors who are non-accredited and those who are accredited very differently. And there's a lot more paperwork required to do the non-accreditation route. If you're going to be investing in a non-accredited investor, there's just more paperwork involved for, in our case, Tundra Angels, if we were to do that. So that's why, from a simplistic standpoint, we decided to only work with accredited investors. That was legal counsel as well. But I think the other aspect to it is, listen, you know, we're trying to be practical in that, like, these investors, it's about putting together a portfolio. It's about putting together a portfolio of 10, 20, 30 investments. So you have to have capacity to deploy, not just now, but over time. And because the last thing I want is somebody to join, or anybody, frankly, I've heard it anecdotally, somebody has shared with me once before that, you know, I've invested 3 times and it didn't pan out. When I say, you know, well, statistically, this is not just me talking, but you need to invest at least 11 times to really get yourself into that high likelihood of statistics to actually hit that 10x that's going to make up for everything else. So you have to have capacity over time. So that's why being an accredited investor, I mean, frankly, kind of gets you in that likelihood of, like, yeah, you're able to deploy the capital you need to actually make money at doing this. So there's a regulatory piece and there's a practical piece.
That's awesome. Well, man, I appreciate you jumping on the pod with us today. Where can people learn more about Tundra Angels? Reach out if they have questions about just angel investing in general. You are a community minded, you're not afraid to have a conversation. So where can people find more about you?
Yeah, so I'm active on LinkedIn, so happy to connect with anyone on LinkedIn. So just search my name, Matthew Kee on LinkedIn. Feel free to connect with me, and then also you can follow the Tundra Angels page on LinkedIn, and then also the website is tundraangels.com. So tundraangels.com.
Really good content on LinkedIn also, if I might say so. So as we're going to transition now into the community Q&A, like I said earlier, if you want access to this direct question and answer session with Matt and all of our other guests, you got to go to milliondollardads.co. Upper right-hand corner, click apply now and have a call with TJ or myself and submit your application for the community. So Matt, thanks a lot for being here. And we're going to dive into the Q&A now.
Absolutely. Thanks, Mike.